All right, guys. So question number two is on leases. So you will be given you will be given a scenario like this where lessee lease an asset from the lessor. All right. Now, a few things to remember. Now you're given. You need to identify who's the lessee and who's the lessor. Okay. So the party which leases the asset is the lessee. In this case, is Gordon Limited, and the party which the asset is leased from is the lessor. In this question, it's Reese Limited. Now, guys, you're given the fair value of the asset, which is 91,383 in this question, which is already given, and you don't need to calculate it. It's already given. Now, this is what lessor uses as part of the lease receivable. Okay, now the lease term begins on 1st of July 2020. You're given the annual lease payment at as 30,000. Estimated useful life of the truck is 5 years. Estimated residual value of the truck is 20,000. Now keep in mind the lessee only guarantees $15,000, which means when the truck is returned to Reese at the end of the lease term, Gordon Limited is a lessee, guarantees that the truck is worth at least $15,000. So if the truck is less than $15,000, which means the Gordon Limited will have to pay the difference out of their pocket. Okay, interest rate is 9%. This is what we use to calculate the lease interest expense for Gordon. Now, keep in mind, Gordon, since it's a finance lease, Gordon Limited will also have to record depreciation on the truck. Now, the depreciation, when they calculate depreciation on the truck, Gordon Limited does not depreciate over the useful life. Keep that in mind. Yeah, Gordon Limited only depreciates a truck over the lease term, which is 3 years. Okay, so first we need to calculate the present value of lease payments. Okay, now guys, lease payments consist of lease repayments, which is $30,000 a year over 3 years, which means we use the present value of an annuity, just like we did for convertible notes before. And then lessee will also have to work out the present value of the residual value at the end of 3 years, which represents a lump sum. So we use this present value factor. Okay, let's see what we have here. There you go. So present value of minimum lease payments, the present value of lease payments is this amount, 75,939, and the present value of the lump sum payment is 11,583, which gives you 87,522. All right, guys, so let's start. Now, at the inception of the lease, this is the liability for Gordon Limited. This is the liability, which is 87,522. Okay, so which rate do we use? We use 9% interest. 9% interest for the ended 30th of June 2021. Lease payment is 30,000. What's the interest payment, guys? So we take 87,522 and you multiply that by 9. And that's the interest. And the liability reduction is how much? Okay, so it's 30,000 and you minus 7,877. That gives you the liability reduction. And the liability is reduced by 22,123. This is the liability outstanding at the end of 30th of June 2021. Okay, for 30th of June 2022, what do you get? The lease payment is 30. Interest payment is 65,399 multiplied by 9%. It gives you 5,886. What is the liability reduction? It's 30,000 minus 5,886. Okay, now if you wonder why it's 24,114, keep in mind the lease payment consists of interest, which is 5,886, and the liability reduction, which is 24,114. There you go. That is the liability outstanding at the end of 2022. Right, guys, for 2023, there's a payment of 45,000. Remember, it's the lease payment plus the guaranteed residual, 45,000. And what's the interest payment? Okay, so again, we take the liability outstanding and you multiply by 0.09. It's 3,715. And what's the liability reduction? It's 45,000 minus 3,715. Yeah, 45,000 minus 3,715 gives you 41,285, which means the liability outstanding is 0. It is 0, 0. Okay. Right, now let's prepare entries in the books of Gordon. Okay, so let's move on to the first. Now guys, keep in mind at the inception of the lease, we call this right of use asset. Right of use asset. Right of use asset is very important. It's the present value of minimum lease payments, present value of lease payments for lessee, which is 87,522, and you credit lease liability 87,522. Okay, first year of the lease term, lessee makes a payment of 30,000, which includes an interest component of 7,877 and a liability component of 22,123. That's what we have. And lessee also depreciates this asset over the lease term. Now, in order to get the depreciation, you take the present value of the lease liability and you minus the residual, which is $15,000, or the lease term, which is 3 years. Yeah, lessee does not take the fair value of the asset. Keep that in mind. Always take the present value of minimum lease payments minus the residual value or the lease term. That's a depreciation over 3 years. Second year, lessee made a payment of 30,000, which consists of interest expense of 5,886 and liability of 24,114. That's what you have. There you go. And then the depreciation expense. All right, guys, let's move on to the lessor, which is Reese Limited. Now, guys, Reese Limited uses the fair value as the receivable balance outstanding at the inception of the lease, 91,383. Okay, that's at the inception of the lease. For the year ended 30th of June 2021, let's see. Lessor Reese Limited receives 30,000, which consists of interest component. Now keep in mind the interest receipt is calculated by using the receivable balance, 91,383 multiplied by 0.09. That's what you get. And the receivable reduction is 30,000 minus 8,224. This is what you have. And the receivable balance is 91,383 minus 21,776. That's what you get. All right, for the year ended 30th of June 2022, lease receipt is 30,000. What's the interest receipt? You take this balance, receivable balance, and you multiply by 9%. Where is it? There you go. And the receivable reduction is 23,735, and the receivable balance is 69,607 minus this receivable. Okay, for the ended 30th of June 2022. Now keep in mind, lessor guarantees 20,000. It's not 15, which means lessor expects to sell this for 20,000 to a third party. Okay, which means at the end of the lease term, lessor receives 30,000 plus 20,000. That's how we get 50,000. Okay, right now what's the interest receipt? You take this liability 45,872 multiplied by the interest rate implicit, which is 9. And this is the receivable reduction, 45,872. And that gives you a 0 receivable balance. There you go. All right, guys, so let's record these entries in the books of Reese Limited at the inception of the lease. Sorry, focus on this. Debit lease receivable 91,383, which is the fair value of the truck, and you credit the truck. Okay, next year, 30th of June 2021, lessor receives interest and lease receivable is reduced by 21,776. For the year ended 30th of June 2022, this is what you have. You debit cash at bank 30, credit interest revenue 6,265, credit interest receivable, sorry, lease receivable 23,735. All right, guys, so this is question number 2. Let me start question number 3 in the next video. See you soon.